All right, well, we spend a lot of time looking at the charts, and when it comes to technical analysis, there is plenty you can learn by looking at what's happening in the markets. Sid Mokhtari is Chief Market Technician at CIBC Capital Markets and one of our regular guests. And good to see you, Sid. And you've come to the table with some great things you're seeing when you look at the world of technicals right now. I want to start with U.S. financials, which has really caught your eye. How come?
The reason being is breadth participation or group of stocks in U.S. Financial sector on an equal weight basis is breaking out in both absolute and relative terms. We often want to make sure that alpha capture measure of relative strength is being printed when you look at absolute and relative, and we're seeing that. So there is a chart called RSPF, which is equal weight ETF of the U.S. financials. The setup is very good. We're showing 80% participation in uptrend continuation. That is an area where we're focusing on. And I generally think when we look at capital markets and U.S. financials, it just keeps me in the right ledger of bull market narrative. I still think this has longevity when financials are leading. Interesting.
I know we've talked so much about tech, but U.S. financials is one that you're watching closely. One group that has gotten a lot of attention in Canada and the U.S. are industrials. What's going on there?
Like that as well. I mean, that is the bias for stay cyclical if you can, stay offensively biased if you can. And there's an ETF called PAVE, P-A-V-E, in the U.S. ETF monitor that we have. That too is also breaking out with successful follow through by its members. In Canada as well, we're seeing a lot of good, let's say, space names like MDA, or we're seeing ATS or Bombardier and CAE. There's a broadening format of industrials in Canada that is also showing similar characteristics. That's again net positive for being offensively biased.
Well, I guess like in the fundamental, observers would say, you got infrastructure spending, you got defense spending, so there's all those other factors that have been getting people interested in industrials. And I guess if you're sort of bullish on the industrial case, like there's a case to be made for, being bullish on certain metals. You're also watching some copper-related trading from a technical perspective. What are you seeing there?
Broadly breaking out on the upside. We have seen a lot of copper stocks that had been, call it, sideways for some time. They have broken out very, clearly with confirmation. Copper itself still range-bound by some measures, but it does show good acceleration. It's moving averages, which is a function of trend following, and that is supporting copper stocks in general. We do like copper, and copper stocks. Just again, like I said, we are positively biased toward industrials.
Okay, so we've covered copper. We've talked a little bit about industrials. We talked about U.S. financials, and then you also are looking at some of the trading amongst Canadian banks, and you're seeing a possible technical opportunity there. Can you tell us more about that?
There's a pair trade that we're recommending. I think the setup is very good for that pair trade when we look at it on a, call it indicated divergences. We put BMO relative to TD. TD has put on a very great performance year to date and on a quarterly basis, whereas BMO by some measure has lagged in our work relative to TD. That relative performance is likely to reverse in favor of BMO. So we are actively engaged by talking about maybe it's best to add BMO and trim TD on that pair trade idea.
I'm not sure if we can show what's been happening with both TD Bank and BMO shares, but to your point, like TD is up, I think about 30+%.
Yes,
so
precisely, yeah.
Basically 3 times the move we've seen in BMO, which is up about 10% this year. So again, you're watching the technical performance. I guess the fact that TD had massive headaches and has sort of messaged to Bay Street about all the changes they're looking to make, and investors started to pay attention to TD. But when you're doing a pair trade, what's the commitment to that? Like, how do you have to think about, okay, how long am I going to be?
Well, look at these indicators on a 1 month and a 1 quarter basis. We think the setup is quite rewarding right now for a 1 month to a 3 month trade. To your point, when you said TD, how strong it has been, if you will look at mean reversion indicators like RSI or stochastics, TD is the most overbought name in relative terms and absolute against other banks. So I would say mean reversion risk for TD is quite high.
And so at the end of the day, if you see some opportunity, beyond the pair trade, trade in a number of sectors, technically speaking, because a lot of people, after the strong performance and the all-time highs for stocks, we were just talking about a Wall Street strategist who's saying, things could, soften at some point soon. Be careful out there. Like, how do you determine whether or not the tide is turning on the broader equity market? Like, do you feel generally good about where we are, even though we're at all-time highs? And what is it that you're watching that sort of feeds your opinion on that?
Lackluster breadth. I mean, we look at the rate of change of participation of the stocks collectively and on a sectoral basis. And right now we see, tech has come right back to leadership. We see financials breaking out to the upside. We see industrials come into play. And we see defense areas of the market, staples and healthcare, parts of utilities, they're actually subsiding in performance. So when you see offense leading in this fashion, we think you want to stay long if you can. Well, I mean, we do have, other measures of looking at it, but I would say for now, stay the course. Trend is your friend.